What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an AVCT, statistical and price action thread of analysis. Before we start, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCab. It's on Discord. Okay, you guys, so let's go ahead and dive right into the charts. We're looking at the price action today being very negative, but remember that we did talk about the golden rule of 3 within this falling wedge, you guys. So we have test number 1, 2, and 3 followed by a capitulation event, and we actually started calling this right at this candle right over here, you guys. So it is very much expected for us to start falling within the lower areas of this descending triangle, or maybe more of a falling wedge, so that we can be able to attempt at a true breakout when we're at approximately 70% completion, or approaching the apex of the triangle right down here, for a true breakout on test number 4, right? We would need a true breakout first, and then we would need to test our newly converted resistance into support, you guys. So this price action, yes, the economic data that is going to be released, like CPI, midterms, all that stuff is creating turbulence in the market, you guys. And those are usually psychological components that are a little out of our control, but we can definitely see within the price action of AVCT that it is expected, you guys. So this is we're still moving according to plan. There's really no issues with what I'm looking at. Now, based on raw price action, you guys, this is definitely a bearish candle. I can definitely see us continue to the downside, and likely to test our 4-spot 618 inverse fib at about 99.26, at about 99 cents, you guys. So there is the potential that we can do that within the coming session or two, more likely the next session, because we are in a 2-hour chart. Excuse me, you guys drank a lot of water. Okay, so let's go ahead and move on to the next chart. This is the statistical side of the analysis. New listeners, we are looking at volatility here, represented by this indicator BBWP. Volatility is direction neutral. In order for us to gain a bias in direction for volatility, we pair it with stochastic momentum, or a momentum oscillator. This is similar to an RSI, you guys. So I have taken note of every single time we have reached above critical expansion levels, you guys, which I consider to be above the 90 percentile right over here. You can see the metrics right over here. It's represented by this red line. Every single time we've started a contraction phase to the downside from these critical expansive levels, I've taken note of that iteration with these vertical lines, you guys. So the criteria for that is the upside thrust based on the iteration, the duration of the iteration, and also the correct iterations versus the incorrect iterations, you guys. So we have some interesting metrics to look at right here. So this is still for the new listeners, right? So the stochastic momentum gauges the direction, that gives us the bias and direction, right? I have back tested the accuracy for the stochastic momentum oscillator versus AVCT, and we have had, out of 12 total iterations, 10 were guessed correctly to the upside. That gives us an 83.33% upside accuracy. So it's not perfect, but it is very good, and it is good to consider, you guys. So out of those 12 iterations for BBWP, or volatility versus momentum profile, we have a total of correct 12 iterations that were guessed correctly to the upside, you guys. Now, we are looking at the entire trading history of AVCT, so sometime about 2017, right, you guys? And I don't usually get reads with 100% accuracy, you guys. And also, I would really... I'm not a financial advisor, okay? Whatever, I'm going to say something next that I don't want to color for you guys. So please consider whatever I do say and whatever I do show or iterate within these videos as a form of entertainment. Do your own DD and we'll be okay, right? You guys, we can always discuss this analysis on Discord. Okay, so I never get a 100% read. It's rare that I get a 100% read, but usually I tend to have a bigger bet on the markets when we're looking at about 80, 90, 100 iterations, you guys. So 12 out of 12 is so far very good, and it's been a multi-year succession of the upside, which is great. And we actually don't even know what it is to fail. And this could very well be one, but it doesn't look likely, in my opinion, you guys. Very, very much does not look like a failed iteration here, and I'll explain why. Now with the 100% accuracy, it's even funny to say, the average upside thrust that we have faced is a move to the upside of about 58.53% over the span of about just over 32 days. This is proof of work. This is the reason why I'm thinking that we are not, you guys. So first of all, let's expand this to a bigger view. You can now see that this is the volatility component of the BBWP, and this is the moving average, you guys. We are now starting our contraction phase. This is already signaling the longer that we stay up here, the more the volatility is going to come in stronger, you guys. So every single bar that you see here is a 2-day print. We are on a 2-day chart. So this is a macro scale move that we're looking at, you guys. So you're looking at 2, 4, 6, 8, 10, 12, 14. This is 16 days of just volatility accumulation right here, you guys. And we are now starting that contraction phase to the downside. And you can see that our stochastic indicator is all the way at oversold percentile down here. Now, for the new viewers, I would like for you to notice that we have made a multi-year low, and we are at historical lows. We have never printed or never reached these bottom levels of the stochastic momentum within the entire trading history of AVCT ever. This iteration is slightly above where we are currently at. So we are now at an all-time low of the oversold percentile, which makes the likelihood of us reversing to the upside a lot greater. So one curious thing to note is that this is actually just a detail that I would like to point out to you guys. This trend line represents a type of trend line regression rejection type of situation happening here, right, you guys? So now if we align this iteration here, that we actually reversed from this point down here all the way up to here, we can actually see that point matches to where we could potentially be. And now the curious thing about this, you guys, now this is just a one of one iteration, so we can't put too much weight on this, at all almost, but it's very cool to notice. So let's go ahead and look at this iteration right over here, the one that says 2 bars, 6 days, right? Let's go ahead and zoom in just a little bit and place some more upside right here so that we can see a better view. Okay, so we actually made a 265% move to the upside based on retracement from this point to that point, you guys. And like I said, it's very curious that we are well within this realm right over here, and that same crossing point is within our trend line regression rejection trend. So it's very curious that it would be put there, you guys. So now if we were, let's apply the statistical metrics to the price action, right? So for the 58% increase based on the point to where the signal fired off, which was just about, it's well within this area, you guys. So we'll put it up to the upside like this, you guys. So we are looking at a potential move in the immediate short-term fib. We're looking at a move right to our 2.618 golden ratio, you guys. That's already very curious that we would take it to there. So it's very likely that it can go up to that move, and this would be potential $1.70 or $1.68, you guys. Now, if we were to apply the 265% move to the upside, please remember, it's one of one iterations, you guys. That also puts us in a very curious place too. We'll take a larger fib based on the swing high and swing low, and we are looking at crossing the 1.618 golden ratio and putting us right at $4.21 if that were to happen. Now you can see that this resistance range based on the 1.618 and the iteration objective, that we have used it. Look at that candle closing right at that support right there, you guys. I mean, look at these candles. The wick highs touching right at there, and trading within that range. There is a lot of rhyming within this area right here, you guys. And also, I'm sure that if we put in some SMAs, we'll be able to see some confluence within that as well. Or let's look at the EMAs. Maybe not, right? You guys, this was just a wild guess of mine. But what I can say is that this being the 50-day simple moving average, there is the potential to, if we made this massive move to the upside, we can actually use the 1.618 as a rejection, followed by us coming back down to either the 1 fib or the 0.786 at $2.45 as a form of support before us continuing to the upside, you guys. So there is a lot of rhyming within these targets. These are oh yeah. Please, guys, remember that these are statistical metrics. They are not certainties. We're only using them so that we can be able to gauge some averages and some desired targets for us to review, which just so happened to have a lot of confluence with other targets previously touched and previously tested. Let's go ahead and move on to the next chart, you guys. This is going to be the 12-hour RSI, and we have noticed already two primary large drives of phantom bullish divergence, you guys. So now this drive right over here was a drive of bullish divergence as well, regular bullish divergence. And we can also see that now we are printing, or are we on the 12? Yeah, the 12-hour chart is still there. This candle would be, with tomorrow's closure, another drive of phantom bullish divergence, you guys. So there is a lot going for AVCT, you guys, and oh yeah, that's right, another drive here as well. Actually, no, not that one, you guys. Just we want to make sure that that we're making higher lows on the RSI signal and lower lows in the price action in order for us to verify that bullish divergence, you guys. So there are now three primary drives of, or four primary drives of bullish divergence in the 12-hour hidden bullish divergence. So let's go ahead and open up a multi-pane to see what we can gather here, you guys. So we'll do this right here and take a look. Let's maximize these windows so we can get an immediate short-term time frame or a bias and direction for tomorrow. Although we already know what we should be doing, right? So new listeners, this is a typical RSI. The upper half is the bullish control zone, bottom half is the bearish control zone. The inner workings of either zones is the weakness percentile, and the outer workings is the the bull strength and bear the strength percentile. This is bear strength percentile and bull strength percentile. So the immediate short term 30-minute, let's look at that. It is suggesting a continuation onto the downside, which is in confluence of what we're talking about, or in accordance of what we're talking about, in continuation to testing these bottom levels, potentially first, as a first stop, the 99-cent zone at the 4.618. Okay, you guys, so we are also above, we're also trading below the moving average, so it is bearish, and we are now well within the grips of the bear strength percentile, so immediate short-term time frame is likely to face downside early pre-market or early session tomorrow. Let's look at the bi-hourly. The bi-hourly is also suggesting a downside continuation, you guys, and now it has moved from the bear strength percentile into oversold. So yeah, we can apply a little more weight into that. Let's look at the 4-hour. It could be similar to the bi-hourly. 4-hour, yeah, it's very similar, you guys. We are now below the moving average. It is bearish, and it is suggesting a continuation onto the downside into oversold percentile. Okay, so the 6-hourly is also suggesting some downside. It's a little weaker, but it is still in the downside, and we are well within the grips of the bear strength percentile here, you guys. So let's look at the daily RSI and see what it's got to say. Daily RSI has entered the bear strength percentile, you guys, signaling a weak downside pivot, but it is we should give it some weight and consider this to be a slow decline for the next day, very likely. Now, the reason why we're looking at these like downside pivots not being so sharp like these over here is potentially due to the economic data that's going to be coming out this week, you guys. We're facing midterms, we're facing CPI. There's a lot of things that we're looking at, many catalysts. So the indecision is very much expected within these assets, you guys. I think this is a pretty good place for me to leave off the video, you guys. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord. I'll make sure to leave the description. I'll make sure to leave the links in the description below so that you can consider joining our trading community, ARCa, you guys. But with that said, I wish you well. I wish you a good night, and I will catch you at the bell mañana. Adios.